So you want to be a trader in 2026, but you don't know where to start. Don't worry, because I got you. I'm going to be breaking down where I would start if I was brand new to trading in 2026. Let's get right into it. So first, I want to start off by giving you a background into my journey as a trader. So I got introduced into day trading in 2019, and it was through Forex. It took me about one of the IM Academy courses to realize that everything that I need to learn is online for free. So where'd I go? I went to YouTube University, did a bunch of research. By trial and error, I started learning Forex. Then 2020 and 2021 comes, and GameStop and the stock market is booming. Everyone's making money. So of course, I redirected my focus from Forex to the stock market and began learning options. Now, just because I've been involved in the market since 2021 does not mean that I have been consistently trading since, 2021. I've taken years off, I've taken breaks. When I first got in, I made money, blew up my account, and then questioned why I even started trading options. Dealing with cycles and, different presidencies, like transitioning from Donald Trump to Joe Biden, kind of made it a little bit rough on me, being a beginner and learning, which in turn made me step away from trading for a minute. When I stepped away from trading, I started getting into wholesale real estate, went in on that. Then I realized in 2024, as I was making all of these cold calls, trying to get my first deal in wholesaling, that I really did love options. I really did love keeping up with the stock market. It taught me how to look at companies, news, products, earnings, and overall the economy in a different light. In the midst of doing all these cold calls, going on appointments, reaching out to real estate agents, following up on leads, I was going hard. I had a phone hammer. I was dialing 7 lines at once, making over 1,000 cold calls a day. I realized that my true love and my true passion was in the stock market. And that's when I decided to go all in. Whether it took a year, 2, 3, or 4, I was gonna be a profitable trader. So that's why I wanna make this video. I wanna help somebody that is starting from ground zero, so I can give you basic guidelines and how to boost start your beginning, so that way you can skip over, 1 to 2 to 3 years of experience and pain that I had to put in. Which brings me to my next topic, learning the fundamentals of trading. You see, I like to compare trading to the game of golf. Most people watch golf and they say, oh, that looks easy, I could do that. And then you get on the golf course the first time and you learn that it's not about how hard you swing or what golf club you have. It's about learning the fundamentals of rotating your hips, keeping your eyes on the ball, and driving through. That actually drives the ball farther than you trying to go up there and kill it, swinging as hard as you can. Same goes with trading. It's not about having the most money. It's not about starting with X amount of dollars, which does help when you have more capital to start off with. Or it's not about how many trades you can take in a day, but it's about learning the fundamentals of the stock market that helps you get started on this journey. What I would recommend you doing is downloading X, formerly known as Twitter, and following Walter Bloomberg, this page right here, and turning on his post notifications. A lot of investors and traders, they pay for news wires to get the news the fastest. That way they can be ahead of the game. Now, I find Walter Bloomberg to be the best newsletter that's free, that posts very quick, reliable news. The next thing that I would begin to learn is the cycles of the stock market. Learn when it's bullish, learn when it's bearish. Some people say summer is slow and choppy. Some people say winter is very bullish. They call it the Santa rally, which is why I think it takes 1 full year in the market to understand cycles and learn fundamentals. Now, since you're already on Twitter, I would suggest you involving yourself in the FinTwit world, which is the financial side of Twitter. Build your algorithm up so that way you see a lot of people that do trade, other day traders, other investors, people that are involved in the market as well. Now, this is where you have to filter what you see and also who you follow. I suggest that you try to find 1 to 2 mentors on there that post good news, good strategies, wisdom, truth, that do it for free. That's a big one. That do it for free most of the time. Or maybe they have a little $2, $3 paywall to keep, bots and garbage out. I've found a couple of people on there that have helped me along the way, that give me encouragement, that help me with ups and downs, and that also help lead and guide me in the market. You can also follow me on Twitter, which I will be posting more frequently, and I will be being honest about my journey in trading as I am on here. I'll put my Twitter page below. That way you can go ahead and drop me a follow. The next step that I would take in learning the market would be learning your strategies and setups. You can go any direction with this. There's people that trade levels only, no news, fair value gaps. There's people that only trade off the news. There's people that swing trade. There's people that scalp. There's people that do leaps. Find what works best for you. If you're caught up at work most of the time, I would suggest you learn how to swing trade. Maybe you have a window from 8:30 to 10:30 in the morning. That'd be perfect for scalping. Maybe you like to read Fibonacci levels. I would suggest you do Fibonacci levels. Find what works best for you that helps you understand the direction of the market. That way you can become profitable. Now, once you learn your strategy, you learn how to find your A+ setup. That means when all these stars align, majority of the time, your trade goes in your favor. I wanted to give y'all a visual representation of what my A+ setup looks like going into the market and what I look for before I enter the trade, and how it's kind of a waiting game. It's not just you pull the trigger right away. You got to wait for it. So what I use is Bollinger Bands. So this is the top band. This is the bottom band, obviously, and this is the middle. This is like a moving average. So usually when price comes down here, it'll tap this band and kind of sit on it, and then it'll pop back up. And this kind of gauges, like, it's kind of like a support and resistance moving average. Honestly, that's the best way to explain it. And then you use this middle band to kind of see, okay, is it going to test the middle and go back down, or is it going to break through and go up? Just like this. See, like right here, if it would have kind of closed right here, it could have came back down, but it broke through, so then it kept going up. I pair the Bollinger Bands with the RSI, which is the Relative Strength Index, which is right here, down here. This helps me gauge when something is oversold or overbought, because I like to trade reversals. So I just don't get in a trade thinking, oh, it's going to reverse. Like, I wait for all these indicators to line up, make my A+ setup, and then I get in. And I'm going to show you how this works and try to show you what goes through my head watching this live. So right off the bat, it's Monday. This is Monday, September 22nd at 9 a.m. Market just opened, ran up just a little bit, and kind of is consolidating at this level right here. So first thing I would look at is the RSI. So I see that we peaked up and we're kind of just trending above that 70 mark, which means that we're overbought on ES. So I'm waiting for an entry. So I'm flipping through the 4 hour and the 1 hour. Before I even look at the 5 minute, this is what I'm looking at, because the bigger time frames are going to tell me when ES is ready to make its move, and then I scale in on the 5 minute. I see we're oversold right here again. I know that we're due for a pretty good size correction. So I'm just flipping through the 1 hour and the 4 hour. And as you can see, this is pretty much noon all day until, nighttime. Just consolidating. Asia session, London session. Okay, so now we're about the time where I would start looking at the market in the morning when I wake up, which is like 5, 6, 7 o'clock. I still see that we're consolidating right here, and I see that the Bollinger Bands are getting tight, which means that there's a big move coming to the upside or downside. So just using context clues, RSI is peaking back down. Sorry, I think I forgot to mention this. This is a moving average for the RSI. So when the RSI is above the moving average, of course, it's going to go up. Vice versa, when it breaks below, it's going to break. So this is what I like to see right here. It came up and it met the RSI and it peaked right below. That's good. That means that it's ready to make its move down. I'm bearish. So we're consolidating right here. Bands are getting tight right here. Now I'm just flipping through the 4 hour and 1 hour still. What I want to see is, it's kind of hard to explain it right now because this is a 4 hour chart. And when I show you, it's just going to show the aftermath pretty much. But on the 4 hour chart, I want to see the same thing that happened on the 1 hour. I want to see the RSI break below this EMA right here, just like it did. So this is the RSI. Just like it broke right here, on the 1 hour. I want to see that on the 4 hour. So this whole time I'm flipping back and forth, and I'm waiting for this to break. Now this is 5 o'clock in the morning on Tuesday. Market doesn't open for another 3.5 hours, so I'm just waiting. But I know I'm going into the day with a bearish bias. So this is the candle that the market opens right here, this little doji candle, which is good. When you have a doji candle, market open, bearish bias, this is my entry point right here. And I go back to the 4 hour, and like I said, it's going to show the aftermath. So it shows it broke down pretty hard if you see it right here on the 4 hour. But when it's live, I'm just waiting for it to peek through. As soon as it peeks through, I go to the 5 minute because I already know what the hour looks like. And I think it would be somewhere like right here. Yeah, right here. This is when I would get in. This candle right here, 905. I would wait for it to touch the top band. This is my entry because I want to go down. And I just write it down. Look what happens. See? We just go down. And then I keep flipping through the hour. And that's exactly what I want. Now, I still look at the bigger time frames, and depending on how big I'm expecting the move to be, that's how long I'm going to stay in. If you've traded ES, it can move 120 points in a day if the move is big enough. And I trade the micro, so I get a few contracts on the micro. My goal is usually like $300. Because I'm trying to be consistent. There was a time period where I was just trying to, I was going big, and I would get the 1K, the $1,200 trades. But I just didn't think that fit me for what I'm trying to do, because I'm trying to be consistent and build consistency and repetition. That way I could just scale into that instead of just trying to start there and risking, blowing my account up and stuff like that. So since this is trailing down, I could wait and just ride this all the way down until the RSI hits 30, which that's what it usually always does, because it's going to make a big move down. Boom. And right when it hits 30 on RSI, that would be my exit. Pretty good size move. Let's say I got in right here. Once price bounced off that level again, let's say I'd probably get in. I'd probably get out like right here because I see resistance. So, I mean, it's about a 30-point move. That's not bad. If you've traded ES, that's a lot of money. So that's like an example of my A plus setup and what I look for and how I flip through the 4 hour and the 1 hour to see what I like. And once I start seeing what I like, I use the 5 minute to scale in. Now, if you're a beginner trader, I know this is a lot to kind of take in and understand. But I just want to give you an example of what I see and what I look for before getting into a trade for my A plus setup. Now, A plus setups, a lot of the times, they're not going to come every day. As you see, Monday, choppy. Nothing really happened. I had to wait for Tuesday before this even came to be. There's other things that I look for too, and it's just kind of hard to show y'all on the replay because it's different when it's live, because you're seeing all of this, you're trying to process this, you're trying to be like, okay, this can happen, this can happen. So it's a little bit different. But I just want to give y'all a breakdown of, more or less what I see and what I look for before getting into my A plus setup. Now, just because you see an A plus setup does not mean that you are going to win. There's different factors that I look for. There's different things. Learning your entry points. It all goes in to learning your strategy and finding your setups. Now, to me, this is the most important thing and the hardest part that separates good traders from bad traders, which would be controlling your emotions. So again, using the A plus setup as an example, many times I've seen my A plus setup. I've gotten in. My last video, I showed that I had an A plus setup and I still lost. Now, why was that? That's because my emotions got the best of me. I reverted back to old ways and old mentality when I first began trading, and I let my good A plus setup, which would have made me 10x, turn against me and become a pretty good size loss. Now, another mistake that is very common when you lose a trade is revenge trading. But let's say you get into an A plus setup, it goes against you, you lose, you say, no, I'm not going to take that. I'm going to get back in. Not even looking at what went wrong the first time. You just blindly go back into the trade and it goes against you again. That's an example of revenge trading. Now, some people may do it once, and some people may do it 3 times and blow up their account in one session. Another example of learning to control your emotions is when you're in the trade, not letting every tick up or tick down affect your emotions. Maybe you went long, and every time it goes up, you feel happy, you feel on top of the world, and then it goes down a couple ticks, and you're stressing, and you're contemplating, oh, was this even a good trade? Should I close right now? Should I do this? Learning to control your emotions and focus and say, you know what? I got in for a reason. Remember why you got in. Tell yourself you got in for a reason. Watch what it does. Set your stop loss. Set your take profit. Sometimes it's just best to walk away and let the market play out. Now, if the trade goes against you once, okay, take a deep breath. Take a step back from the charts. Evaluate, okay, what went wrong? Why didn't my trade work out? What could I have done better? Was I emotional when I got into the trade? Was I FOMOing in? There's a lot of questions you can ask yourself. That's why I suggest journaling. This teaches you about yourself. This helps you self-reflect on mistakes, habits, and tendencies that you can have without you even realizing when you're trading with real money. Now, some extra advice. If you're fresh, green, brand new to trading, I would suggest going to TradingView and trading with the paper account. Now, using the paper account, which is not real money, by the way, is where you want to learn your fundamentals, your strategy, and your setups. While you're doing that for 3 months, you can save up some money and go live with real money in 4 to 6 months into doing this. It's not a race. It's whenever you feel comfortable into taking that step from transitioning to paper money to real cash. Or you can pay $50, go on somewhere like Tradeify or Top Step, take an evaluation, pass it, and get funded. Now that means you have access to capital that isn't yours. And even though it says 50K, it's not really 50K with all the rules and the limitations and stuff like that. But it does give you an opportunity to trade with other people's capital. Disclaimer, I'm not sponsored or anything like that from Top Step. However, I do think it's a great move to make if you don't have a lot of capital or you want to trade with other people's capital. There's people that make a lot of money off Top Step and other prop firms because they know what they're doing. It's a great opportunity, but that's pretty much all I got, guys. Of course, be patient with yourself. Don't let a losing trade, a losing week, a losing month affect the way you see yourself. And remember, trading is a skill. It's a skill to bring income in. I wouldn't advise you thinking of it like an end all be all. There's many different things that you can do. Trading is just one way that you can make money on the internet. So learn it, scale it, own it. But those are the 3 simple steps that I would begin learning if you're brand new to trading to become a successful trader in 2026. It might not happen fast. It might not be pretty at first, but if you stick to it, you can do it. Thank y'all for watching this. Leave a like and a comment on the video. Also follow and subscribe for more content that I'm going to be posting. And let's make this 2026 the best one yet. Peace.